Good afternoon, Fabio Donetti with the Musings of Winston, covering the week of May the 3rd and May the 7th. I was a little bit concerned with the markets, although, yes, we have new records and the market is doing okay. After we have tremendous Q1 earnings this past Q1, especially from the leaders, the Alphabet, the Apples, the Facebooks, the Googles. This week was PayPal. And the rallies in these names has been very meager, 1-2%, and they haven't done much for the year. Yes, there is some good rally on the industrials and the cyclicals, but we see a market a little bit tired. Anyways, just a reflection. Maybe you want to take a little bit of money off the table just in case. Remember, we had a little bit of a nasty reaction when President Biden announced his capital gain ideas a few weeks ago. So maybe the market is ready for a little bit of a pause or a correction. So we'll follow on that. The big banks, for instance, JP Morgan, Citi, others, are telling corporate clients, take your money elsewhere. We don't want all these levels of deposits because it requires us more capital and we're not lending the money. For instance, JP Morgan for Q1 said that their deposits grew 36%, but the loans under 2%. And remember one thing, inflation is created by printing money, but not by money from the central bank, by money by the banks. The banks create the credit, and that's the money that gets spent and pushes prices up. The central banks in the world have been buying a lot of bonds from the government, trying to get those bonds off the banks so the banks lend the money, but they're not doing it. So many reasons, could be the fiscal stimulus because of the pandemic, could be other issues. Also, the big leaders of the world today in the economy don't borrow any money. Google, Apple, Microsoft, they don't have any debt. So there is not serious loan demand from the corporate sector. So especially the leaders, the big companies, the guys who drive today's economy, the General Motors, the new economy. So with this and that, some comments on that story. COVID and vaccination, a little bit of a crossroads. In the United States, we have now an excess of vaccines because not everybody wants to get a shot. A lot of people are resistant for one reason or another. So that's an issue. And in the rest of the world, we don't have enough vaccines. So there's a lot of demand and there is a clear shortage of supply. During the week, President Biden floated the idea of waive the patents of vaccines for a while. And within few hours, the biggest allies in the European Union says, no way, Jose, we don't want to do that. Most experts say it's not about the patents. Today, there is not enough supplies. Remember, we need 21 billion vaccines, and usually we produce 3. I said 21 billion because it's 7 billion people times 3. We need 3 shots, 2 shots right away and 6 months later, according to the experts. So on those numbers, we need 21 billion. We produce 3 billion every year, so we have a lot of problems with supplies, things that you need from machinery to chemical components, etc., etc. So that's an issue. One of our big, lovely emerging markets, Brazil, gave us some very good news. The central bank raised rates again. Good rally on the Brazilian real. Good rally on EWZ, which is our favorite Brazil ETF. And also helped by commodities. The grains are red hot. They're really pushing Brazil current account to very nice numbers. And other commodities are very hot, so clearly helping other emerging markets. So good, we like Brazil, it's doing very well. And jump into the next commodity, which we like a lot, which is copper. All the experts and everybody's talking about serious demand issues because if we want to go green in the world, from windmills to electric cars to anything else, we need huge amounts of copper, 4x more than usual if we want to go green. So green is great, but it's very copper intensive. And the expert says bringing a mine to the market takes a long time. And number two, even the miners are reluctant because they do that and then prices can collapse 60-70%. Remember, commodities are volatile by definition, so they don't want to maybe take the risk. So we like commodities. There was a good article on Barron's talking about that. The name that we like the most is Freeport McMoran FCX. It's the symbol Frank Charlie X-ray. But the big news of the week was the very disappointing labor report. Everybody was expecting 1 million new jobs, even people like Morgan Stanley, 1.5 million. The number was 266,000. A big disappointment. At some point, the 10-year traded at 147. Then it closed unchanged. And the market did rally. In a way, relief that there is no pressure. And on the other hand, I remember something that Jerome Powell said 2 weeks ago. He said, listen, on the 12 banks of the Federal Reserve System, we have deep research into companies, manufacturing, services, mining, agriculture, non-for-profit, etc., etc. And we see that the economy is not growing evenly. Yes, there are some sectors that are red hot, but others that are lagging and lagging big. We still have 7-8 million jobs that are not back from pre-COVID days, so we have ways to go. I think the number that we had on Friday clearly indicates that that is the case. So we need more data, we need to do more study, more analysis. Is people out of the sales force? Is people because they got the checks, they don't want to go back to work, etc.? We don't know. We don't have a complete answer yet, but clearly it's something that we will be studying and talking about. That's all. Let's have a great week. Like always, 8:30 every morning from New York, live in Zoom, interactive. You can participate. You have more information in our page, winston.capital. Have a great week.